Hello YouTube, this is Stephen with On My Way to Fire, a channel about early retirement and all things investing. And in today's video, we're going to talk about my performance on covered call funds for the month of June. All right, so in May, we're going to compare where I started and where I'm at now, and just general market performance and dividends. And we've had a heck of a ride this last couple weeks. We had a market sell-off in tech and precious metals, gold, silver, along with Bitcoin continuing to go down. And a lot of that really accelerated on Friday, June 5th. And that was the week before the SpaceX IPO. So, the market consensus on the narrative of the story of what's going on here is that there was market liquidity event to get money ready to buy into SpaceX. So I think that's partially true, but also it was profit taking for some of these chip stocks and technology really ramping up from April going into May and continuing going up. It kind of had to stop somewhere, and that's kind of where we're at. All right, so in May, my cost basis in shares was 15,500, and in June, I was able to increase that to 17,800, so a 2,300 net purchase, which is nice. My profit, though, from May was $850 to $900 in gains in terms of cost basis versus market value. However, in June, it went down to $450. So that sell-off really hurt me and totally flipped it around, which is quite a difference in the shares just not holding up. Now, the good part on that is that's opportunity to buy into these funds when they're low, but you have to have the cash. And my other monthly paying dividend stocks for REITs and BDCs and preferred and all that stuff generally tend to pay between the 23rd and the 30th of the month. So I'm in a little bit of a cash crunch here right before, we got another week and a half till a lot of these hit. And that just leaves paycheck contributions and proceeds of sales on other stocks in the Roth IRA to, gather this money to purchase new shares. So I'm doing what I can. I did have Pfizer and a couple other dividend paying stocks pay in the last week. So that's been good. I've been able to put some money from my taxable brokerage account into the Roth, but for the most part, the big money has not come in yet for the month within the Roth of the general dividends that it generates. And so for the most part, I have been reinvesting the dividends in all of these funds except for three. So my Amazon, my gold, and one other one, I'm not reinvesting the dividend. I just want to see, based off cash depositing, if I can get better limit price orders on one of those three. And those are the ones that are like the latest within the account. So they're not really generating that much income at the moment. So I'd just be getting partial shares anyway. So that's kind of where I'm at there. In terms of overall goal, I wanted to have between 3,000 and 3,500 in each of these funds. So that's 30 to 35K. And so right now I'm at 17,800 in purchases. So I'm somewhere between 50 and 60% to goal. And on a couple of these funds, I am at goal. I've hit 100% or I'm at 90%. So, it's tempting because the crypto ones are the ones that are hurting the most right now. And in terms of value, they're the best value, but it could be a value trap because they're not really holding in a general sense. The crypto has really, really gone down since October of last year. And I thought I was buying, into a bounce, but it just has not held up. I don't know. We may be at capitulation where people are totally exhausted on buying, and that's when it will start to come up. So, reluctantly, I'm holding my nose and I'm still buying some shares into the Bitcoin and Ethereum ETFs, but they're really hurting. I think the Ethereum one is down like 30% and the Bitcoin one's down like 20 to 25%. But, the good thing is the dividends are still holding. They're still paying every week, and it's purchasing more shares or partial shares. So it just is what it is right now. All right. Okay. And, to start in probably through May, I was at 80 to 90% of new money was going into these covered call funds. So I've reduced that to somewhere between 60 and 70% of new money. And that's because I've seen better opportunities in REITs and BDC companies and preferred stocks. So what I'm trying to do here is stabilize the account because these covered call funds are not holding up. Buy other things that tend to hold and could rally, but the dividend only pays once a month. So it's kind of a trade-off. You're not going to make a whole lot on these other ones, but I figure they'll do better in the long run. So it's better to be diversified. And I honestly think that within the next few months, I'll probably get to somewhere around 50% of new purchases going into the covered call funds rather than 60 to 70%. So we'll see. It's just time will tell. Where I stand now on my total amount of shares between all the funds, 15% of my shares are as a result of holding and reinvesting the dividends. So that's kind of interesting. In terms of dividend income, I was receiving somewhere around $540 to $555 a month. I'm now at $560 to $580. So that's nice, a little bump. And again, while the prices are down, it's reinvesting in a better cost basis. And as some of these funds recover, I'll get a better dividend in the weeks to come if they hold. But it's really just a matter of what the market's going to do. And so like Nvidia, Palantir, they've been under pressure lately in these funds because they have to pay the dividend. And depending on how the stock does, you're going to end up having NAV erosion, which is the net asset value. And that's what I'm experiencing in those two. In terms of best performers, the ones that are more general, small cap and the NASDAQ funds, those are doing really well and paying consistently and don't really have huge dividend cuts. So really what I'm seeing is the single stock ones are the ones that are very volatile, and even the dividends may not be consistent. And so a good example of that is Nvidia. I was getting somewhere between $35 and $45 every week on a dividend payment. This week it's only going to be in the low 20s. It's not a lot, but we need that share price to recover and come back. And even though it's over $200 a share, trading on the regular stock, that's where the NAV erosion comes in. They have to pay the dividend, and so some of these funds just don't hold up over time. Now, in the end, I think Nvidia is a stock that'll probably be double where it is from here within the next year or two. They've had blowout earnings, quarter after quarter, but the market doesn't really respond. So it's a matter of the market picking up on their continued success and being the leader in the AI market for these chips that will benefit that company. So I've changed up my strategy a little bit, and in my taxable brokerage account, I'm actually buying shares of some of these tech stocks. So I'm trying to improve and have exposure in terms of regular shares as well as these covered call ones in the Roth. So it'll be interesting to see which one does better. I think my reluctance on buying shares is just it's so expensive. You're paying between $205 and $210 on Nvidia lately, and all I can do is purchase partial shares because I have dividend income coming in throughout the month on the taxable account, but I don't want to allocate too much at one time, so I'm just buying partial shares here and there. So it's going to be a grind, it's going to take some time, but that just is what it is. So that's pretty much the takeaway of where I'm at here. The market had a huge flip. I was at an $850 profit in in May more or less, and now I'm, in May, here I am at a loss at about $450. So it's just perspective. Probably a full week ago, I was at a loss of over $1,200. So it's pretty quick that I had a huge, rally back to recover some of that loss and, basically have like an $800 flip between the worst case scenario and where I'm at now. And some of these shares are just kind of trading flat now. We're in between earnings periods, and, the SpaceX is really taking over the news cycle. So it'll be interesting to see what happens. And as a side note, there are a few SpaceX launch funds like this that just came out between some of these providers like Roundhill, but I'm not gonna go there. I think SpaceX is overvalued at where it's at, and there's just like a lot of hype right now with what's happening. So I'd rather just wait and see what happens. I do have Tesla as one of my covered call funds, and that one's been pretty much flat to down recently. It's performed okay, but it hasn't really been a stellar one. So it's kind of in the middle of all of them. So where I'm at, it's kind of a meh situation. These aren't really doing as well as I hoped they would. And in the end, I'll probably squeak out a gain somewhere between 15 and 25% overall. But that's also, we need to factor in that I'm getting paid with the dividend as well in that time. So, basically what I put in, I will get more than I put out, but it's going to take a lot of time and effort to manage these. And there's another strategy that I can do, which is buy and sell shares of these and look for capital gains within the Roth IRA. And I've been pretty good at doing that within the last month, making between 10 and 20% on some of these shares because the price has gone all over the place. So I think what I'm going to do is consider selling part of the dividend reinvestment. If I get more than a whole share, I might want to sell a whole one when it's, having a little bit of a comeback, and, gauge within the account, all between the lots, try to get out of the highest cost basis ones, and then, let the dividend reinvestment continue and just let it play out, because really time is the asset in the situation. As these prices stabilize, as the market comes back, the dividends will increase and the share price will go up. So that's where I'm at. Let's see where we are next month. Appreciate you stopping by and checking out my channel. If you got anything out of this, please give me a like and subscribe, and we'll see you in the next video. Thank you.